Hi, and welcome to another weekly recap. So, today I'm going to recap from July 14 to July 18. So, this week has been a action packed week where there are multiple trades that have been taken. But at the end, it became a break even week. The number of losers matching the number of winners. Here in this week, I got three losers and one winner, and one is a partial loser, so that's why it got matched up to a break even week. So yeah, we'll analyze pair by pair. So let's start with GU first and then jump on to XAU. So in GU I got one L and two L's and one win. So one is a kind of missed winner, you can say. I'll show you what the missed winner is, then we can push towards the winner as well as the loser. So let's see this a week of GU in detail in the charts. So let's start with July 14. So from the daily analysis, the swing structure is bullish and the internal is currently bearish, and price has mitigated the extreme daily demand zone. So there is a high chance that there could be a strong bullish reaction. At least the price could mitigate the supply, or we can also expect the price to continue pushing down. Either thing can happen, but since this demand was formed via sweep of liquidity, I'm expecting some kind of bullish reaction from this demand, at least onto the supply. Coming to 4-hour chart, the swing structure is bullish and the internal structure is also bearish. Here we can see the pullbacks very clearly. The price action was clean this week, and this is a good supply from which I can look for sells. I can look for sells, or I can look to target that supply because we are expecting some strong reaction from this daily demand zone. Also, there is a 4-hour demand unmitigated demand zone that's also valid, so we can expect a reaction from that 4-hour demand zone as well. And also there is some inducement, so probably price can push up to take out this inducement at least. So this is H1, the 4-hour internal structure, as I marked this as H1 swing structure. Most of the times it coincides, but most of the time it does not. Whenever the price action is not smooth, it does not correlate. So the internal structure is bearish for the H1. So we are getting this bearish internal structure. So if the price pulls back without mitigating the 4-hour supply, then I can look for sells targeting the 4-hour supply. If the price is coming off from the 4-hour supply, then looking for sells from the supply does not make sense, as price can flip the supply and push further up to take out the inducement as well as the 4-hour supply. So I was just waiting for further confirmation before getting into the trade. So price pushed up and took out the buy side liquidity and mitigated into the supply. So this supply is currently holding the price. So probably we can expect some bearish reaction from the supply onto the 4-hour demand zone. So once the price reaches the 4-hour demand zone, uh, I'll break even the trade, as we can expect a strong bullish reaction from that zone. So the target would be this low. And yeah, actually you can see this from two angles. The first one is, price mitigated the daily demand zone and it had chalk bullish in the H1 chart. So this could be a valid demand zone from which I can continue looking for longs, expecting a big bullish move. And from the second angle, from the bearish angle, what you can see is, uh, price, the internal structure is still bearish and the price has swept the buy side liquidity. Now it's going to push down to take out the weak internal low. So there are two things. There are two angles in which you can see this price action, but I'll see in the second angle. And whenever the price reaches this H1 demand zone, I'll go break even. So this is my break even point, and this is my TP point. So there was a clean lid here as well as here, and the price took out the first lid. I placed my trade. So this was my liquidity candles. This was my displacement buffer and a stop loss buffer, and yeah, I got tagged in before the close of London. So at 9:55 I got tagged in, which is just before the London kill zone, and 11:07 I got tagged out. So price actually mitigated this fair value gap and then pushed up, probably, uh, and took out this lead. So this was the turning point where I started to analyze the previous trades and how where the LC2As and LC1s played out. So I understood that LC1s play really well when there is an underlying low resistance liquidity below. So in this case, yeah, it's still low resistance liquidity, but it's a fair value gap, so it's a strong imbalance, and the price can react off from imbalances. So what I realized it whenever there is a strong bearish push up, so it's better to wait for much more confirmations like LC2A or LC2B, or much better wait for H1 to chalk bearish, H1 to chalk, and then look for LC1s from the fresh POI. So in this case, I'll show you what happened. Yeah, price actually made a fake break, and then it made a clean LC2A, and then price hit my TP. So this is a very big lesson, and moving forward, I can, whenever I see a clean LC1 played out with the POI that has formed within the session. Is actually earlier I had the rule that if the POI is formed within the session, then I can look for LC1s. But now I am adding one more layer to it. If even if the price is formed within the session, and if and there should be low resistance liquidity associated with it, so only then LC1s play out. Otherwise, there could be, a reaction, and then the price can push up and take out my stops. So in this, if the price is having a heavy reaction like this, the much better option is to wait for more powerful entry models like LC2A or LC2B. So this is one, turning session, turning trade. So let's apply this filter and see uh, in future how it works in the future. Yeah, session update. Price rally down, and it smashed this demand zone. This is, this, I know this demand zone wouldn't work. Probably this demand zone, this is a fake demand zone, because most probably people would think price as chalk bullish and then try to go for longs. But this massive push down indicates that there are so many sell limit orders right here. Sorry, buy limit orders right here, and they kept the stops below, so that's why this massive push. And yeah, this is the H1 chart where you can see the price actually rallying through, and this becomes a breaker block, and the price respects that and then again pushes down. So now the price has reached the 4 hours demand zone. So now I can expect the price can chalk bearish, and then I can look for buys if it does. Otherwise, I'm happy to continue to follow the bearish internal structure. So this is July 14, and moving on to July 15. On the daily chart, the price is still in the same demand zone. So we can expect and also the price has mitigated the 4 hour demand zone. We saw that yesterday. So now I can, if I get a strong bearish shift in the H1, then I can look for buys targeting the daily supply above. So this is the idea, and here you go. This is the 4 hour supply that is currently holding the price. So I can jump into H1 and see if there is any bullish sweep zone formed. If it is formed, then I can look for longs from that zone, targeting that. This would be my first supply to target. Most probably this supply would get flipped because there is low resistance liquidity out there. This supply probably would get flipped, and then the price would push further up. So yeah, let's see how the price action is going to react. Before that, let's analyze H1. So H1, it's very clean. Here you can see that H1, the swing structure is bearish, and we are waiting for some bullish confirmation to play the swing or internal pullback. So price has mitigated into the 4 hour slash daily demand zone, and there is some drawn liquidity to target, that is the 4 hour supply above, and this 4-hour supply has an liquidity called fair value gap. So price can be magnetized towards the fair value gaps too. So if I zoom in, you can see that price had swept this liquidity and then chalk bullish, and this demand got held and then price pushed again. So this is the unmitigated demand zone from which I can look for buys and target the buy sell liquidity above. So it's a very minor trade. Probably you won't notice these trade, but you must analyze in depth so that you can catch these moves. And yeah, uh, this was actually the demand zone, but a price actually swept the lows of it, because obviously it should, because there is no lid in this leg. So price actually swept the low of the demand zone and then strong push up to, as the price is getting magnetized towards this fair value gap. Yeah, and I think price has already reached it. Price has made a clear equals above with the fair value cap. So this is an added confluence for me to look for buys. So here in this case, uh, price has mitigated into the current demand that is holding the price. It has made a fake break and then it pushed down. So this is the pullback inducement that I'm talking about, and a clean LC2A for me to look for buys, and then LC2A played out. Now I can look for buys targeting the fair value gap above, as well as the fair value gap, as well as the equalize. So eventually the price will mitigate the 4-hour supply, but that's later thing. And yeah, with the news, the price actually pushed up, and this was our entry candle, and the price pushed up, hitting our take profit, and then after hitting our TP, the price rallied down so sharply. It did not mitigate the 4-hour supply, so it just filled the fair value gap and then it pushed down rapidly. But nonetheless, my TP was hit, so it became a winning trade. So this was the winner for the week, the only winner for the week. This is the EOD, a low resistance liquidity. This is obviously a low resistance liquidity being built. Just caught the small move, phase D. Actually, the phase D actually failed, and another internal leg was formed. So we are yet to have a swing pullback. But the next day, what I did is since it swept a strong buy sell liquidity and pushed down. So I was not interested in this high anymore. So I thought of making this as my swing range so that I can focus on my current price action. So moving on to the July 16 Wednesday. In this case, price almost took out the daily demand zone. So it's very clear that the price is going to take out the demand zone. So looking for buys for me becomes less probable for me, because of the daily demand is not getting respect. So now I'm getting doubt whether this is actually an institutional demand or it's just a fake one. And yeah, the internal structure in the 4-hour is still bearish, and this is the supply that is currently holding the price. But most probably this would be invalidated because we have much more high probability supply above, and this could be an inducement for the supply above. If the price mitigates this supply, then I can wait for the price to chalk bearish. Then probably this is a low resistance liquidity which can be taken out today. Already there is low resistance being built. This is H1, and we can see that the low resistance is being built. If the price pushes up rapidly and then chalk bearish up here, so I will be definitely targeting these low resistance liquidity with this freshly formed supply. But unfortunately, price first took out the low resistance liquidity, then pushed up and took out the high, swept the highs, and it started to consolidate. So, price of the sell side as well as the buy side liquidity. So in this case, so mostly the price would start to consolidate for a while, because before it before the equilibrium is destroyed and the price moves in a particular direction. So coming to July 17, here you can see that the demand is now failed and the low got swept. So we can infer two things from this: either the price after sweeping the sell side liquidity may give a strong bullish reaction on the up, or the price can continue pushing down to mitigate the next demand below. So two things can happen. So the best option is to wait for the session bias to form via H1 and then look for sells. I mean, look for trading opportunities. So in this case, in the 4-hour chart, as you can see that this is the new candle, and you can see both the buy side liquidity as well as the sell side liquidity got been taken out. So price would consolidate for a while, and then it eventually breaks out of the range, and then it shows the current direction. So this is the let me quickly have a check of the time. So we are having 12 more minutes. Cool. Okay, yeah. So this is the H1 chart where we can see that the internal structure of the H1 is still holding. So I will consider this as a buy side liquidity sweep, and the internal structure is still holding. So which means that this low becomes a swing low. I mean that's what I assumed because it swept liquidity. So I assume this as my swing low, and this to be my uh, this is a valid demand zone where we can look for longs because the price swept the sell side liquidity and chalk bullish. So this is a valid demand zone where we can expect some bullish reactions. See if the price is bullish, um, you know, uh, since the internal structure is bearish, if I get a strong bearish shift, then I can look for sells from this demand supply zone and target the swing low. So that's actually the structural alignment if the price chalks bearish. So price mitigated the demand zone. I was not interested in looking for longs as that would make trading against the internal structure, especially if the internal structure, I mean, especially if the swing structure is very small. Um, it even if you take even if there is a fractal structure, that I can assume that as an internal structure. So here you go. Price mitigated the demand zone, and it got mitigated multiple times, and there was a low resistance liquidity being built up. So that's cool. Right, tomorrow we can see that the price can chalk bearish anyway up here, and then all these low resistance liquidity can be taken out at ease. Mostly, what I think is price can liquidate these highs, um, and then chalk bearish, and then I can look for sells. So that's a story for on July 18. So let's see what happened on July 18. So we are having a clear confirmation that the daily demand is now gone, and we also are aware that the price can push either up or down depending on the market structure, I mean, depending upon the market psychology. Why we are expecting up? Because price has swept the sell side liquidity, so we can expect some bullish reaction. So why we are expecting price to push down? Because there are other demands which the price can be magnetized towards. These are the two uh, possibilities. So in the 4-hour chart, so here you go. This is the 4-hour chart, and the internal structure is still bearish, and this is a buy side liquidity sweep, and I'm expecting the price to push down and take out the weak internal low. And from the 4-hour also we can see that there is some low resistance liquidity being built up. So if I get a strong shift in the H1, then I'm not hesitating to look for sells. So it's as simple as that. Here you go, a clean low resistance liquidity, and the price chalk bearish during the London Open. So what I can think is, just take look for sells. But at that point of time, I did not consider this equal highs. Uh, yeah, actually, I consider this as my last area of demand supply. So price mitigated this supply, and it respected it, and it chalk bearish. So price chalk bearish, internal swing structure is bearish, structural alignment what week. So this flow becomes weak, and price can push up, mitigate the supply, and then push down. So this is as simple as that. This is a textbook kind of thing. Um, it chalk bearish. Then there was this is M15, and there was a clean lid from which I can look for sells. But two things that was running in my back of my mind, though there is low resistance liquidity and other stuffs present, but I was always thinking about the current price action. So this candle, it's a very strong candle. If you analyze it closely, it's a very strong candle. Why? Because this, okay, sorry, has swept some serious liquidity to the, I mean, this has swept some serious liquidity to the left. Also, it has mitigated the demand zone. In M15 demand zone, it is not visible in the H1 chart. So it has swept liquidity, demand zone is being met. So what I thought was this is some serious liquidity sweep, and probably price can push further up, and even it can sweep the buy sell liquidity up here, and then it can start to push down. So but my assumption was we got a structural alignment, and there is a clean lid. So price actually moves from buy side liquidity to sell side liquidity, or the vice versa, from one liquidity pool to the another liquidity pool. So in this case, it swept this the sell side liquidity. So now it should reach a buy side liquidity, which is in the form of lid. So buy side liquidity. So once the price reaches the buy side liquidity, then again it should search for a sell side liquidity. Probably this would be the sell side liquidity. So this was my expectation. So did that really happen? Here you go. Yeah. So this was my lid, and price to cut lid, and another strong candle with a strong rejection. Actually, this took out this high, so this made the trade much more high probable because it took out the extreme lid. So I was very happy about it. It took the extreme lid. So this was my actual liquidity candle, and I placed my stop loss yeah, just below this one, and I got tagged in. I placed it at 8:47, and at 9:30 I got tagged out. So if yeah, this is a zoomed in version. So, price just tagged me in and then pushed up, tagged me out. I am not sure of exactly why the price took out my stops, but this is actually a good loser. I applied the filter that I created in this week. That is, I must take LC1s only if there is low resistance liquidity, and I followed that rule, and there was low resistance liquidity as I mentioned earlier, but still, market is a market, and it took my stops. Cool, nothing to worry about it. And yeah, at 9:50 my bias got changed, so with a sweep of liquidity and chalk bullish, so I was expecting the price to push further up, at least to take out the buy side liquidity above right here. So this became my new demand zone, but I was not very interested in looking for buys, because anytime price has taken the Asian ice, and anytime it can push down, flip this demand zone and take out all the low resistant liquidity below. So I don't want to make that move, and there was low resistance liquidity below to target, but in the above side there is no such thing to target. So I was not very much interested in looking for longs. But did the longs play out? Probably not. The longs did not play out. So this high was actually taken, and then some more candles were there, and then the price started to push down. So later I realized that this is a M15 supply that the price was mitigating onto. So then I realized, oh, I'll show you here. Yeah, okay, sorry. There was an M15 supply which the price mitigated. We can see the M15 that this rejection consists of three candles, one and strong rejection candle, and the bullish candle started to form. So this strong rejection candle is my supply, and price has exactly mitigated there and started to push down. It's okay. It is what it is. Like it played out. There was sell side liquidity. I targeted it, but it did not happen. So there's nothing to worry about. Why I got a losing trade? It's just a losing trade. That's it. So that's it from GU today. So let's move on to XAU and see what happened on this day. So, continuing with our analysis, in XAU, we have only one L, and that's a partial L. So I can call this as a missed trade because I have not, first I must tell you why this is a missed trade. I was in the trade was going in my direction, so I took 50% of the risk by not taking partials by reducing the stop loss, and eventually price took that stop loss and it pushed in my direction instantly. So that's why I call this as a missed winner. So in also for also when I tag like this after a certain period of time, when I look back, I must not see this as just a losing trade. I must see this as a missed winner and a losing trade. That's why I come up with new rules, new framework, etc. uh, I'll tell you what happened on this trade and why I termed this as missed winner. So yeah, let's start with July 14 uh, from the start, and let's gradually proceed into day by day. So this is July 14 daily chart. Here we go. The daily structure is the swing structure is bullish, internal is bearish, but we know that the price has reached the discount prices. So price can slowly push up, no, and then reach the swing high. So this is the actual expectation. So we know that this demand is currently holding the price, and this is the actual demand that is holding the price, and price had just chalk bullish. So probably we can expect some bearish reaction onto this demand zone, and then the price can push up, and then it can continue the same thing. So that's what the expectation is. Moving on into the 4-hour chart, um, the swing structure is bearish, and the price has reached the premium prices, but the internal structure is still bullish. So what I'm trying to play here is I'm just trying to play the internal pullback. So price can come down for two reasons: either to make an internal pullback, or since the price has already reached the discount prices, price can just flip this demand zone and then continue pushing down to take out the 4-hour swing low peak. So in either cases, the price needs to come down. So it's a very clear direction. So that we got in the 4-hour chart. So moving on into the H1 swing structure is bullish. So we can look to play the H1 swing pullback using from the 4-hour chart. We know that the price is going to come down. So what should we play in H1? We can play the H1 swing pullback. If the price flips this demand zone, so this is the demand that is holding the price. If the price flips it, then the price will make a clear bearish internal break of structure. Then I can look for some supplies and time my entry and target the discount prices in the 4-hour and eventually mitigate the 4-hour demand zone. And obviously, there are some liquidity poles which I can also look to target. So yeah, plan is simple, and yeah, price actually made a strong IBOS, bearish IBOS, but it did not pull back. Probably tomorrow I can expect the price to liquidate this supply and liquidate the supply and mitigate into the supply. So once the price mitigates that, then if I get a strong chalk or something like that, I can look for sells, or probably tomorrow I'll be directly looking for sells from M15 confirm N15 LC to X models. But the only criteria is we see some low resistance liquidity right here. So this POI could fail and the price could just sweep all the buy side liquidity and then chalk bearish and then can push down. So yeah, I must be I must set my mind for both the scenarios. So moving on to July 15, we see nothing from the daily chart. This demand is still holding the price, and there is nothing to discuss about daily. When you come to the 4-hour chart, you can see that the price has mitigated into the 4-hour in the daily demand zone, and it has swept this on say. Okay, this is actually 17. Okay. Yeah, here we go 15. So yeah, it's pretty much the same in the daily chart. the price chalk bearish and the price did not reach the daily demand zone. So we are still bearish, looking to play the fractal swing, fractal pullback to the daily demand zone. So from the 4-hour perspective, you can see that the 4-hour is clearly chalk bearish. So now it's very much high probability for me to look for sells. And this is a very good PY from which I can look for sells. And here you go. There is some low resistance liquidity being formed here. And there is a 4-hour supply, 4-hour demand below. All I need to get is a valid confirmation entry in the H1 to look for sells. That's it. So yeah, this is H1 and this is 4-hour supply, and this is the low resistance liquidity that I talked about to you yesterday. So two things can happen. Price can either respect this 4-hour supply and then chalk bearish and then it can continue to push down, or price can flip, take out the buy side liquidity above and then chalk bearish and then it can push down. So to be on the safer side, it's always preferable to wait for H1 to chalk bearish and then look for sells from the freshly formed supply. So you can use this conservative approach whenever you think that there are two possible scenarios that can happen with the price. So in this case, yeah, I think there are two possible scenarios that can happen. So I'm waiting for extra confirmation to look for sells. And here you go. The price actually chalked bearish, and this is a supply that was holding the price. But the entry model was actually not there. You can say that if I had kept a confirmation entry right here, then it would have been a beautiful winner. But I'm not interested in that one, so I didn't place any confirmation entry. So I waited for the MC to play out, MC entry to play out, but this was the MC candle. So probably this is not an ideal MC candle that you want to trade with large stop loss and poor risk to reward. So I just ignored this trade, and yeah, it's just moved on. That is 15 for you. Coming to, let me check, this 16 or not. This is 16th. Cool. The price has mitigated the daily demand zone, so the target has been completed. So there is no option for looking for sells. Then now we need to look for additional confirmations from the 4-hour and H1. So from the 4-hour perspective, we can see that the internal structure is bullish, but the small internal structure is still bearish. And we also got some low resistance liquidity right here. So if the price mitigates this supply zone and if I get a strong bearish confirmation in the H1, then I can look for sells targeting these low resistance liquidity. This is a very simple trade. And yeah, from the H1 perspective, you can see that the internal structure is still bearish, and we also have the low resistance liquidity right here. All I need to do is wait for the H1 to mitigate into the either this H1 supply or this H1 supply and chalk bearish, or sometimes if the price mitigates this H1 supply, I can directly look for trades using M15 LC2X models and then boom, target the low resistance liquidity below right here. So here we go. Price mitigated the supply and there was a fake break, uh, and I expected the price to take out the pullback inducement and then push down, but the supply took control and it was a very strong push. So price actually made a bearish high boss in M15, which was a bit convincing. So it was very clear. It was a very clean trade for me to look for MC entries. But I was still hesitant to use the confirmation entry because there was a red folder news. Also, when price just mitigated the supply, I'm not sure whether the price will push further up to mitigate into the edge of 4-hour supply, but so that there is a slight hesitation for me to look for confirmation entries. So that's why I used MC entry. So I waited for the price to take out the 61.8 level and mitigate into the supply. Then I can keep sell stop orders. So if and only if the supply gains momentum, then I will be tagged in and I would be tagged with a winner. So that's the expectation actually. And yeah, price reached the 61.8 level, and yeah, this was my uh, LC. liquidity candle. Then I placed my sell stops with a small with a small displacement buffer and some stop loss buffer. I think I didn't keep any stop loss buffer, but a small displacement buffer, and I targeted 2 or 2.6 hour. And when the price reached some amount, this was my stops initially. So when the price reached this one, so you can see that this candle has swept the highs of this candle and then it pushed down. So this could be a strong high. So this that was my expectation. So I trailed my stop just above this high, so that giving it a small buffer. But price took out my stops, and the next candle you can see that it almost reached the take profit, and in subsequent candles it smashed the take profit. So yeah, it is what it is. Uh, you know, it's a calculated trail. It was a calculated trail, but it ended up as a partial loser. And eventually, once the price hit my price took out the low resistance liquidity below. Price became sorry. Once the price took out the low resistance liquidity below, it swept the low resistance liquidity and it became violent. And it pushed rapidly up and mitigated in not only mitigated the 4 hour supply, but swept buy sell liquidity above it and then started to push down. So probably this could be the range where the price will continue for the next few days. So once it gets out of that range, then we can look for an entry. Cool. So yeah, this is how I missed the trade, and nothing much to talk about it. So this is 1355. I got tagged in, and the price was moving in mid. So I have reduced the risk. So this is where I reduced the risk at 155. So and I got tagged in. It's a bit jumbled. One, that's two, two, three, four, five, six. Cool. Here it is correct. Let's move into 17. So here we go. Yeah, as discussed, I discussed in depth about the 17th daily price action. Uh, so now jump into let's now jump into the 4 hour chart, where you can see that the this is the news candle. It swept both the sell side liquidity as well as the buy side liquidity. So as I discussed earlier, price would consolidate within this range for some time, and eventually it will equilibrium shifts and the price moves in a particular direction. So for me, this is a weak low, because this low failed to take out this high and the internal structure is now bearish. So I can look for sales targeting this low. So that's what the plan was, and here we go. This is the internal structure, and if I zoom in, I actually analyze that uh, price had swept the highs, and it has made a bearish leg, which means this high could hold, and this is a strong high, and this high could hold. So I marked this as my the supply, and I waited for the price to mitigate this one, and then I look for sells. So this was the clear idea. So moving on, and I also got a lid here. So if the price takes out this lid, so I can keep my stops just above the POI and then look to target the lows. So the plan was very simple. Thing here is, price just mitigated the supply and then pushed down. So I was not convinced with this. Uh, I was not a big fan of this MC entry, because this is kind of a low resistance liquidity, and the price did not take out any lid. It is so I just waited for this lid to be taken out. So I assume this to be an LC2X model, and I can look for trade using LC2A. If I miss, I'm not worried about that, because I don't want to take into shitty trades. And yeah, once again the price made another leg down, then I was convinced that okay, this high could act as an inducement for this POI. So if the price and mitigates and takes out this high, then I can look for an MC entry, continuing the bullish structure, and the target would be the same, this low. But price smashed all the POIs above. Uh, you know, the these are the supply zones that were initially formed, and all these formed low resistance liquidity for from the H1 perspective. So once the price was bearish, that is took out the sell side liquidity right here. Once the price took out the sell side liquidity right here, and the demand stepped into the market and took all the buy side liquidity above, and now it started to pull back. So yeah, price did not reach the 4-hour demand zone. So probably we can expect one more leg down so that the price can reach the 4-hour demand zone. So that's what is expected tomorrow. So tomorrow is 18th. Let's say this is 18th, 18-1, 18-2, 3, 4, 5, 6. Yeah, it is an order. So let's take the pen tool and start marking. So from the daily perspective, we still see that the price is a bit consolidative. Why? You can see that the price has showed both the buy side liquidity as well as the sell side liquidity, and probably once the price sweeps the sell side liquidity, price might go and take out the buy side liquidity, but this starting candle is bearish from the daily perspective. So let's not analyze and paralyze from the daily chart itself. Let's jump into lower time frames. So in the lower chart, in the 4-hour chart, we can see that the H4 has reached the internal discount prices, but still it did not reach the 4-hour supply. So price can push further down. The bearish internal structure can continue, and the price can push down when mitigate the 4-hour internal, and then it can be bullish, and then the price can take out the weak high. So or otherwise, since the price has already reached the discount prices, price can just continue pushing up, and then it can take out the weak high. So two things can happen at this point of view. But the idea is to look for uh, from the H1 perspective, it is very clear the internal structure is still holding. So I don't want to trade against the internal structure which is currently holding. So I just waited for the fractal to give me confirmation. And once there is structural alignment, then this low becomes weak, and I can look for sales targeting the 4-hour supply right here. And there is no valid supply zones above. So if the price pushes up, only if the price talks bearish, then I'll be looking for sells. So I'll not there is since there is no valid supplies above, I'll not be looking for sells directly using M15. So moving on, and yeah, uh, price actually chalk bearish, and this was the supply that was holding the price, and then the price mitigated the supply and pushed down. So this supply was currently holding the price. So now I waited for the price to mitigate the supply, and if I get any entry models, then I'll enter. Or or ideally, what I expected was all the supply form low resistance liquidity, and this low resistance liquidity will act as an inducement for the supply above. So that's what I was expecting. I was expecting the price to mitigate this supply, and then I can enter from here and then look for sells targeting the weak internal low. That was my target. So I decided to enter this supply directly because there was a clear LC2A that was happening right here. So I don't want to miss this trade and enter here, and then boom, it can go all the way down. So that was my expectation, but price actually smashed the supply, and it just took out the highs above. So this supply is not yet valid, so I need to wait for the price to chalk bearish before looking for. So now I need to wait for the price to chalk bearish before looking for sells. So probably this could happen Monday or anytime sooner later in the day, but currently it is not happening, so there is no trades today. So yeah, that's how I ended my week with one missed trade, and actually it's not missed trade since I don't have any technical rules for that. So currently I'm calling that as a missed trade. But once I have a set of rules on how to trail my stop loss, then I can decide whether that's a missed trade or it's a good loser. So for now, um, as I already told you, this week was action packed, but in the end, it was just a break even week. So yeah, probably the market is moving good. Probably let's see. If I be consistent, then I can grab some consecutive profits, or you know, I can make use of this period fully. So yeah, let's see what happens in the next week. I'm so excited because the price is moving nicely and it's making the pullback and it is manipulating. So we need manipulations because we are a smart money concept players. So once or you know, whenever there is manipulations, we get the trade. So sometimes even we get manipulated. So that's a different story. But um, let's see what happens the next week. For now, um the only lesson that I took from this week is um, when to enter. I mean, the additional layer that I'm applying on LC1s apart from. So now there are two rules for LC1s. Just to have a quick recap, one is I'll take the LC1s only for the POIs that is formed within this day. It could be Asia, it could be London, it could be New York within the day. And the second thing is the price should mitigate that POI. I mean, there should be low resistance liquidity below. So only then the LC1s work. That's what I saw in the earlier, and that's what I'm going to implement. So if the price has mitigated a POI with a strong momentum, then ideally I need to wait for an H1 to chalk bearish and then look for sells or look for M15 LC2X models. So I did not I'm not in the um, stage of, I have not yet configured whether I have not yet decided when to use H1 chalk and LC1 and M15 LC2X models. So once I get data, once I get feedback from the market, then I'll be fine tuning it. For now, this is the only layer that I'm applying to my trading strategy. So yeah, see you guys on the next week. I think that's it from my side. Until then, cheers, guys. Bye.